What's going on, everybody? Just it's different little. Can you let me record this? What's going on, everybody? How's it going? Just a different little video for you today. Something different. I mean, I haven't uploaded in a while, simply because I didn't really want to be honest. But here we go. So a little trade breakdown from this week on US30. It's going to be a little different. Obviously, if you don't understand, it's kind of going to go over your head. But if you are interested, I mean, I can always ask or answer questions for you. I'm more than happy to do that. So sit back, relax, enjoy this little breakdown for the pair of US30 trades that I unfortunately did not take this week. But yeah, sit back, relax, enjoy this, and comment down below what you think. All right, so what is going on today? So basically, what I'm going to be doing, this is kind of like my first kind of, go at this whole thing. Um, so what I do is I trade within Forex. So what is Forex? Forex means the foreign exchange market. What is the foreign exchange market, you ask? The foreign exchange market is something that is similar to the stock market, but it trades a bunch more money, and it's not dependent on stocks. It's dependent on currencies. For example, the euro, the Australian dollar, the US dollar, the Canadian dollar, the Japanese yen, um, the Great Britain pound. Those are some currencies that I guess that we trade. So to start off here, I'm going to go into kind of a trade breakdown based off of the stuff I have learned through my education that I've received, through my mentors, through a company called I Am Mastery Academy. So if you see me looking over here, I have notes about these trades, about this trade that actually these trades, but same screen, that I will be going over. So if you see me look over there, that is why I'm looking over at my notes. And then if you see me looking up here, this is where my monitor is, where the chart is. So when I share my screen here, in the next couple minutes or in the next minute or so, you will be able to see me looking over there, but also see what I'm looking at in total. And I have a couple other tabs open as well. But yes, here we go. So let me hop right into this. So basically what we are going to be going over today is a pair of trades on what we call US30, or it is also called the Dow Jones Industrial Average Index. As you see, I'm looking at the chart for broker on FXCM. And if you're new to this, if you see all these lines, you're probably like, screw it, right? You're probably like, screw it. I have no idea what's going on right now. So right here, I'm going to hide everything just so you can see the candles and everything. So basically what the Dow Jones Industrial Average Index is the stock market. It's where the stock market is, what price or what price point or how high or low the stock market currently is. This is the US stock market. Obviously it says US 30. So here we are. This is US 30. Um, if you have any questions about this, if you have any questions about this, and as we go on, I suppose as we go on, don't be afraid to reach out and contact me. I will throw up some links down in the description, as well as maybe pop-ups on the video at the moment right now, so you guys can kind of get connected with me and be able to ask questions, and especially in the comments down below if you want to, or yeah, however you want to contact me. So basically, these two trades, as you see, this is US30. These are two trades placed on the 25th of June. I personally didn't catch these, but I marked them up after the fact because I wasn't looking at the chart within this time. So you see, we're on the 1 minute time frame up in here, 1 minute time frame. But so these trades played out. The setup played out at about 9 a.m. and these trades played out from 10 a.m. So about quarter after 10-ish, to 10:30 in the morning. So as you can see, so we will go over the first trade here. So the first trade, I will take this off, that off, and that off. So this is the first trade. So here up here, before I start going into this, these are my and the majority of the team that I work with. This is our confirmations. So basically, trend, structure, retail money, institutional money, imbalance, which is also called IPA or inefficient price action, mitigation, the Fibonacci measurements, which is these bars or these lines over here. That's a Fibonacci measurement. Wyckoff, which is how we trade, and the session time. So as we dive into this trade, we saw a big push down here. We saw a big push down, big institutional push down, and then a fast push away. So that right there clarifies that the institutions got into this trade to push price down, clear lows, and clear out liquidity so they could buy back their positions and get back into the market and push the market higher. So as we see it coming back down, we see it created a new high. As we zoom out, this was the previous higher high, and we see it created a new higher high. So when it starts retracing, here we have initially I would see two points of interest on this trade. So we saw it create a higher high, right? We saw it create the higher high. We saw this break of structure. Let me put an arrow. We saw this break of structure right here. Correct. We saw that break of structure. See, it created a new high, and it also swept this lows, but it didn't take out this low. So we still have a low, still have a higher low, and now a new higher high. So my 2 points of interest on this trade would be within this imbalance. So what imbalance is? IPA, inefficient price action. It's where there's only buying or only selling in the market, and there's none of the other actions. So that creates open prices or open orders that need to be filled back in, which the market does it no matter what. It eventually fills back in balance. So we have this imbalance created from this down move. As we move out, we'll be able to see this a little bit better. Let me turn this back on so I can see where we are. Yeah, so we can see this a little bit better. So here is the start of that institutional move, right? The institutional move is right here, comes down, takes out these lows, clears the liquidity. You see me leaning over, I'm scratching a bug bite on my ankle. Everything's genuine. But yeah, we see the market take out the liquidity here, correct? And then we see that fast push away, super fast push away to clear that, to take out this imbalance within that institutional move and create a new higher high, which is perfect. That's exactly what we want to see with everything like that. So it's the ideal setup. So as we clarified, we made a new higher high. We saw the institutional move, but then obviously we get potential for two different areas of interest. So one, I would say right down here, this is one area of interest, and then the other one is where it says entry on the other area of interest, because like I said, the market has to come down and fill this imbalance. So the reason I wouldn't play this as imbalance, like this wick right here, I would play this wick because it's the start of the down move and then the up move. So that's just personal preference, however you want to play it. If you played it with this wick too, you would have got in and you would have caught it anyways, but the stop loss is a little bit bigger. So it's personal preference. I like to see opportunities to tighten up my stop loss as much as possible. So I even could have played here off of this wick. I wouldn't have played off of this body. I would have played off of these wicks. That's just personal preference based on back testing, etc. So yeah, I played off of these wicks just so you understand everything, and then as well as this area right here. So first, I would see this start to retrace. We get down to here, and if we got down into this area, I see this start to retrace, and I would whip out a thing called the Fibonacci retracement. That's right here on TradingView. I have this little magnet on, so I can click and it automatically attaches to the wicks. So how we do this, or how I do this, I go wick to wick. So based off if it's a sell or a buy, I go from if it's a sell, I go from top to bottom. If it's a buy, I go bottom to top. Bottom to top, because obviously if you're buying, you're going to want it to go up. So this zone would be valid for me. This zone would be valid because we see this whole move take out those lows, right? We see this whole move take out those lows, as well as everything like that. But on the 5-minute time frame, we saw that the institutional move started up here. So this zone is also active because of the start of the institutional move. The mitigation of that institutional move is up here at the start of the institutional move. So I would be considering this area before I'd be considering this area, but this area is also valid. So we saw this area, the farther down area, and we marked it up with the Fibonacci. So that Fibonacci matches up in our zone. The 0.88 to 0.71, that's the money zone. That's where I like to play my trades off of. That's where the team likes to play our trades off of. And that's where we kind of, that's where we play. So since I have this fib, I might as well mark this zone up as well. This zone's a little bit better. I like it closer to the 0.88. That's how I like to place my trades. If it's right on the 0.88, that's just another confirmation. So we went through our confirmations almost. I didn't start with trend or structure, but at the moment, in this market where it is right now, it's a bullish structure because we have this low here. We created a low as well. We took out this low, but then we also created a higher high. So it's a bearish market structure currently at the moment. So as we zoom back in, or bullish structure, sorry. So one is bullish. That is our market structure, bullish market structure. 2, we're asking for retail money. So where is that retail money? The retail money is down here. We have where that green line is. We have retail money there. We also had retail money here. Retail money here. Whoops. Retail money there, and obviously this big green line is retail money. That just adds confirmation for the liquidity being taken out. So this is 2. We'll label that as 2. We'll take that mitigation off. Institutional. Where are the institutions coming in? Obviously, number 3. We already identified our institutional move. So there we go. Institutional move right there. This whole thing, I will mark it up how I usually mark it up. We'll have, let's see, all the way down to there. Stick that wick. We'll go -202, just to spread it out there for a little bit, and we'll move that as institutional candle, and we'll go to -193 just to get a little bit more space there. So yeah, there's our institutional move. We have 3 marked up. Like I said, it'd probably be easier to see on the 5-minute, because look at that whole institutional move, right? That whole institutional move all the way down to this wick. 198, we're gonna go 202, actually 200. So there we go. We have our whole institutional move marked up. There it is. So number 4, we got imbalance. So I have imbalance here. And we also have, take it off that wick, we have imbalance here. So those yellow boxes are my labels for imbalance. We'll put 4 for imbalance. We'll put it out here so it's not super, so we'll start it here. We'll go, actually no, we'll just put it in there. We'll go 4 right there. 4 imbalance and 4 imbalance. 5 mitigation. So where is our mitigation point? So where we go back, I would go back on the 5-minute. Got to zoom out, find our place again. So where is mitigation point? So mitigation for this move would be at this area. So mitigation for this would be at this area right here, right off the top of that candle. So I will delete that because it's kind of getting a little confusing, but mitigation right off the top of that candle. So what mitigation is basically, in a small sense, is where will the market go when it has to fill in those orders to suffice and fill in those empty orders and fill in the price action. So as we clarified, the mitigation area. So our mitigation area, for me, I'd play off the body of that candle. So our mitigation area, let's make this purple. Okay, mitigation is that purple marker right there. I'm actually going to save something here. So save as, we'll just go mitigation, purple, mitigation. Perfect. So where that mitigation falls into is right in this imbalance, right? Right in this imbalance, which that's personally where I want to see it come off of first, because we have this chop right here. Also, it was close to weekly open. So there we go. So we have that chop. So next, Fibonacci. We have the Fibonacci 7, Wyckoff, accumulation schematic, take out the lows. This, we're looking for a spring, right? We're looking for a spring. So there's our spring. Accumulation or whatever, accumulation, same thing. Breaks the high, come back down, looking for a spring back into that retest. And session, so this session is perfect. This move happened 9 a.m. to about 10:45, 10:30. So that's perfect. That's within the New York session. So that's perfect. Right now, we're sitting pretty right now. So we are set to set up this trade. So where we go, right? This is where my second trade would be. We always aim for at least 3-to-1 risk to reward. So if I were to have this for my second trade, my 3-to-1, I'd probably go back into that area where our next trade is. So that's where that trade would have been, and same area for this. Just nice, easy. This is a 4-to-1 risk to reward. This is about a 3.5 risk to reward. But obviously, we caught this one first. So we caught this trade, right? We caught this trade, but we also see that we still have a potential point of interest down here that we could potentially come and take. So if you're risky, if you're looking for that small time frame bounce, we see this institutional move right here. So let me delete all these. So that imbalance is filled. We still need to keep that that zone highlighted. So we see this area right here. Right? We see that area. Potential for another institutional move, which we see that push up, probably on lower time frames, cleared highs. I know it cleared highs here, so there it took out liquidity, and then the fast move down, right? The fast move down, fast move away, especially, which left imbalance, which it came up here and took, but play off that body, that order block, or order block, institutional candle. This is where our entry would have been. Kind of similar price action, similar entry. So where I would be taking this trade to would be down in here in this imbalance of that up move, right? Because we need to come clear that imbalance before we are able to go the other way. So I would go all the way down here to that imbalance, and that is almost a 3. I would have tightened up my stop loss a little bit, because I just won this trade, right? Tightened up my stop loss a little bit. We got the sniper entry. We got wicked in with that sniper entry right here. And then we got that nice move away. Personally, I took this one. I saw this opportunity, and I took it when we were about here. I saw this opportunity. I set my stop loss at the bodies of these, and I got took out. At break even with these. No, I didn't get taken out at broke even. I got taken out because I took this late. So my entry was down here and stop loss was up here. So I was in drawdown for a little bit, got taken out at the top of these bodies, and then it continued to go down. Would have hit my TP, but that's okay. You always get endless opportunities. But so basically, that was this little schematic, little idea that we ended up playing off of. The reason I would see this imbalance, one, I also back tested this all the time. We back test US30 all the time. And this is kind of the fill of the imbalance, especially with this mitigation point within this imbalance. That's just A1 right there. That's A1. So yeah, this was basically a very smart money concept breakdown of how we trade Forex and how we trade within the market. If you have any questions about this, don't be afraid to reach out to me, as well as members on the team. And I will throw links of the team down in the description, um, so you can reach out if you are in need be. But yeah, so basically that was my breakdown of a small time frame bounce. I like to call it a small time frame bounce because you're taking a buy up and then right up to the sell opportunity, and then you're taking that same sell down. So yeah, this is a very, very simple breakdown of US30. I hope you guys enjoyed it. This is kind of a new video on the channel, but I really hope you guys enjoyed it. Stay tuned for more because this is actually a lot of fun. I can break down trades, wins, losses, blank, 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 this, that, and the other thing. So yeah, take it easy. Hope you guys are having a great day, and see you later.